Waiting to see when we're live here. Okay, and we are up. Hey guys, welcome back to our Back to Basics series. I think this is number 5. I'll probably lose track of that in the future. Today we're going to start going over charts. So finally, past the basics, the mundane, the kind of background of the markets. Still trying to fix this camera, as you guys can see. So today we're going to go into something that's a little bit more concrete. It's a little bit more something that you guys will actually use every day. We talked about why order flow was a little bit inconsistent from what we normally look at, but what we look at every day as traders is always our trade ideas software that gives us that statistical advantage, and then looking at charts to figure out our technical advantage and our feel. So just the last week's recap, and then I'll see if you guys have any questions from last week. But last week was essentially about order flow, and you can go back on either channel, either mine or Trade Ideas, whichever one you're watching this on at any time, and you will be able to see all of the videos. So if you're just tuning in at this time and you want to go back and see what we talked about before, you can do that at any time. We went through order flow. So we went through how the market actually moves. What happens when someone buys? What happens when someone sells? What happens when people are making markets? And this type of thing. So I guess the first thing I'll open up is just to see if anyone had any questions for last week, any feedback or anything they wanted to go over when it pertains to order flow in the markets. No, everyone was pretty good with that? Okay. All right, so let me move this. Again, I hope this thing snaps out of it's broken. If not, you're not going to see me this time, but that's okay. So essentially we're going over charts, right? And if you think of trading, most people immediately think of charts, right? They think of guys sitting in front of tons of different screens with tons of different charts out there. You know, just looking at squiggly lines, right? That's it. Funnily enough, that's what people think of, and to be honest, they're not really wrong when it comes to it. So basically, this is just, again, our little summary sheet that just talks about what is charts, what are charts. So basically, the analysis we do around charts we call technical analysis. I don't know why. It's just referred to as the technical side of the market. You know, we'll talk about the statistical side of the market, which is basically just running stats on different strategies and different different game plays, and the same way you would run stats on any kind of sports team, right? Win-loss ratios, these type of things. But this is technical analysis, which is just essentially a crowd psychology thing, which I'll talk about in a second. So charts are both an art and a science. So what we're going to initially talk about is kind of the science behind it, what you're going to be looking at with charts. You know, how are you actually going to focus on what it is that you're going to see? You know, what is a candlestick? What is patterns we're going to go through next week? You know, the very kind of basics that will teach you what you're looking at. And then from there, we'll go on kind of how you could action that a little bit better. I talk about crowd psychology, and this is something I'll get into many times, and you'll hear me reference many times as well, where, you know, what is a chart and why do we use charts? A chart is essentially just the historical action of both the buyers and the sellers in any given market. And that's all it is. It says, okay, where has price been recently? And if, you know, back again here. So where has price been recently? Who has been buying? Where have they been buying? Where have they been selling? You know, where's the recent highs of the markets, the lows of the market? But it's mainly just trying to figure out where the market as a whole is psychologically. So we talked a lot about in order flow and how the markets worked. We talked about how basically the market is this hive mind where it takes every trader and every investor and every market maker and hedge fund manager, they all have to agree on a price, right? And that's what we've spent most of our time trying to figure out. is that, you know, when buyers come in, this is how the market moves. This is how sellers can push the market back down. This is how things flow. So what a chart is basically, instead of you watching that level 2, which we talked about, and having to see every single tick and every single move, you can go and see that on a chart. So you can find out things like where buyers stepped in when the price was falling to hold it up, where sellers wanted to take profits as the thing was running. These different past opinions. And then, you know, we'll talk about it a bit more, but the reason that it's important is because price has a memory, because people have a memory. The best example I can give is that if you were in a stock, and every trader has done this, and I hope that you guys never do, because, you know, you get to learn from someone who has right from the beginning, but we've all bought a stock and it's completely collapsed and tanked. And we found ourselves just saying, if it ever gets back to even, if I ever get my money back, you know, and I'm not losing on this trade, I'll sell out. If enough traders and enough investors do that, you can spot that area on the chart where it will come back to even, and presumably there'll be a lot of people up there selling. So, you know, we're going to go into the more official side of technical analysis next week. This is kind of going to be a pretty decent overview, but there's certain things that us as technicians assume, and one of it is that the charts discount all knowledge, that essentially that everything that is known in the market is already baked into price. And that's a really important thing to note, because most people who come into the market, and you know, I'm sure possibly you guys include it, will come in and they think that it's the news that moves stocks. They think, you know, because when you watch the financial media, they'll say Apple is up today because blah, 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 blah. But as we showed in the last one, the reason that Apple would be up on a day or down on a day has to do more with the buyers coming in and the sellers coming in. Their motivation, you'll never know. You know, they will never tell you why they're doing what they're doing. There's many times that a good story will come out and the market will sell, or a bad story will come out and the market will rally. So this is why we focus and we try to block out that noise, and we focus on the charts. We try to focus on not so much why something is happening, but what it's happening. Brian Shannon, who you probably all have met, he's been in a couple of our events. He is, I would consider, my mentor when it comes to technical analysis. He's brilliant at it. And one thing that he always says is listen to the message of the market. And that's what we're going to do. Instead of trying to sort through all the news and try to figure out, you know, is this a good company or is this a bad company, we're going to try to spot trends in the market. And trends generally persist in the market because if you are a large market participant, it takes you a long period of time to buy and sell. And this is the concept of liquidity that we talked about, where we said, you know, there's only so much out there, sellers. So if you want to buy, there's only so many people out there willing to sell to you. So if you're really big, it's going to take a while to do that. And you're going to leave footprints in the sand, which I think is something that Steve has coined, where it just, you don't know exactly what's going on, but there's a trail for you to then follow. So so this is our first chart, and this is a very basic chart that they call a line chart. So essentially, this is a chart of Apple, and what a line chart does is it takes the close in this period of every single day, and it just puts a point on the chart and then draws a line between them. So you don't really get to see what happened in the middle of the day. You just know that Apple closed with about 162 or something on this day, and then 165 or so on the next. So this is essentially what this chart's telling you. This is a very basic form of chart. If you go to most websites, this is what you're going to see right off the bat. There is some advantage to this. You know, you can find out things. We're going to talk about trends and technical patterns and stuff in later videos, but there is some things you can see here, right? It's pretty obvious that between May and October, Apple was moving higher, and then it's, you know, obvious again that from October to December, Apple was then moving lower. So everybody essentially ends up using charts. So even some big fundamental analysis is the study of how much the company's making. You know, how many, a fundamental analysis would look at this chart and say, okay, I think Apple is going to make X amount of iPhones next year and sell them. It's then we'll bring up a chart and basically look at and say, okay, where is Apple in the grand scheme of things, right? So it's a bit of a combination of this, but I just wanted to go over this chart. I don't find much value to it, but this is the basics that everybody would look at. So does this make sense to everybody? A simple point at the close of every day and then a line that just connects that point. That makes sense? So now we're going to get into the harder ones. So move us over here a little bit. So these are candlesticks, and you'll notice that our charts and trade ideas, as well as most charts that most technical traders use, are candlestick charts. So these were invented by Japanese rice traders. I should know the time, but a very, very long time ago. You know, we're talking hundreds of years ago. And essentially what they started to do is, because they were trying to figure out how much rice to grow and how much rice to sell, and trying to even trade the markets and, you know, buy rice at a lower price and sell it at a higher price, they would hand draw these charts every single day. And what they found is, not only did they get the information that that last chart gave, which was the close of every day, but they could discern some information from things that happened in the middle of the day. So pretend this is the same daily chart on Apple, right? First of all, you got to look at the color. Green means up, red means down. Sometimes it's a hollow chart that is up and a solid chart that's down. But for what we use in trade ideas and what you guys are going to look at, red was an up day, and red was a down day and green was an up. So there's 4 points in every single chart, and every chart is made of these 4 points. So everything, every technical indicator, every chart pattern, you know, everything that you'll see on our website is all derived on these 4 points. And that's the open. So that's where the opening trade happened in the day. So 9:30 Eastern time, I think it's like 6:30 your guys' time, rolls around. The first trade that happens is in this price right here, right? Then it trades throughout the day, and we mark the low of the day with this wick, and then the high of the day with this wick, and then the close here. So I can look at this chart, and you can very easily see that most likely, you don't know exactly what happened intraday, is that the price opened up about here, sold down a little bit, rallied up throughout the day, and then sold down a little bit and closed here, right? So I get to see, if we go back to the other, what happened to make this print in this area. That makes sense to everybody? Right? And there's some things that we can derive from this, and we'll go into a bit of that more, but what we'll look at is just the inverse here, right? Where the same type of thing happens, and that's how you know it's a red candle. So most people get confused. They say, okay, where do I know which one of these is the open and which one of these is the close? And that's kind of just told by the color of the candle itself, right? So now we know that this is the exact same candle as the slide before, but we know that the open was up here and then the close was down here, and that colored it red, right? So in this day, what probably happened is that we opened here, we rallied to the high of the day, sold off dramatically, bounced a bit, and closed here. And so the beauty of this is these become kind of fractal in nature, right? You can look at a daily candlestick and you can kind of guess what happened intraday. So then if you look at, say, a 15-minute candlestick where each of these represents a 15-minute time frame, you can say, okay, well, I now know what happened within that 15 minutes. And then if you go into a 1 minute, you can say, I know what happened within the 1 minute. So they go all the way out on the Trade Ideas charts soon. To people who are watching this in the next week or so, you guys will get it as well. All the way out to monthly, where each of these will represent a 1 month period of time, and then all the way down to 1 minute. And what you need to do is, when you find out what trading style fits you better and what time frame fits you better, that's the time frame that you'll gravitate to. And again, there'll be a little homework for you guys at the end. So now you're not so glad that you signed up for this, now that I'm going to start giving out homework every week. So with this, so why candlestick charts is always the next question. Why do I care what happened intraday? And don't worry, your homework is not to memorize all this. You know, this is stuff we'll kind of go down through the road, but there are many schools of thoughts for this kind of trading, the candlestick style of trading. But again, it goes back to what I was talking about in the first slide, where we're trying to glean the psychology of the market participants. You know, where are people going to take profits? You know, if they won. If you bought a stock and it rallied, you know, 20% or something like that, you are probably going to take profits, right? You're going to put that money in your pocket. So to do that, you're going to have to sell, right? So our job is to try to predict when the sellers are going to step in, and conversely, when the buyers are going to step in. So these are, a lot of these are from the same Japanese rice traders way back in the day, and them trying to figure out whether or not they could use these candlesticks to predict future price action. So for example, my favorite, and people who watch all my videos know this, is the hammer and the shooting star. So essentially, let me just, I'm going to draw something. So essentially what I can glean from looking at a chart like that, and we're talking about this candle right here, and then this candle right here, right, is essentially what happened. So let's, you know, we'll refer back to this. We can look at this and say this is going to be green in our example. So that means that the stock opened here and it sold off all day long and then just rallied right up until the close. So what that tells me as a trader is that the sellers came in and tried to push this lower. Somebody bigger and more powerful than those sellers came back in and started buying the stock aggressively, and the sellers lost, right? So you think about every day as a bit of a war, and who's winning. And in this case, the early day was lost to the buyers, right? The bulls. They retreated dramatically. They couldn't win a fight to save their lives, but then all of a sudden came in strong at the end of the day and pushed it all the way up to the close, right? Now, does this by itself mean the stock's going to crank up forever? And certainly not. You know, this is one aspect to a whole trading strategy, you know, which we'll go into, and you guys will build something that makes sense to you. But for me, what I like as a trader is to find out where other people's pain points are, which sounds mean, but it's basically how I like to do it. Is where is it that if I was a seller here earlier in the morning and I shorted the stock, which we talked about as a bet that the stock is going to move lower, and then all of a sudden I noticed that the buyers came in and forced it all the way up into the high of the day, well then I know I'm immediately down to position. So I know that everybody who bought or who sold in this area is losing money. So if you sold to bet that the market's going down, the only way to get out of that position is to buy, right? So there can be trapped sellers in every single position. And same opposite over here with this candle, where we opened up here, right? The buyers took it up all day long, and then all of a sudden one or a number of large sellers came in and pushed us lower. So we closed at lows. Again, showing that anybody who was long in this area is in pain. So if you bought in that area and you're in pain and you now have to sell, your sell is going to push down the price. So this is why we started with the order flow, is because I wanted to show you how prices move, right? Prices move when you've got your bid and your ask, and prices move when people cross that, right? So when people they're willing to pay higher and higher prices, and that will push the stock up. And when people are willing to sell at lower and lower prices, that will push the stock down. So what we're doing with these charts is we're saying, okay, what has happened in the recent past, And what does that tell us about the psychology of these market participants that push it up? So again, the guys who push the market down over and over and over again through here, well, they sold it at lower and lower and lower prices, and it's possible that they're now trapped in those bearish positions. So as the market rallies, they have to get out. That means they have to buy, and so on and so forth. Does all this make sense? No questions from anyone? Nothing? Okay. So here it is in the real world with a trade ideas chart. So here's a chart of Apple, pulled right from Trade Ideas today. So this chart and the chart that I showed you at the beginning are the same chart for the same time frame, and they're both daily charts. But you can start to glean a little bit more information from this chart than you could from the other. Whereas the other was just taking this point and then this point and drawing a line. Now you can see the action that happened. So for example, and we'll go back to the beginning of the chart to show you that. For example, here is what we call a gap. Right? And if you're in Trade Ideas for any length of time, you'll know that all of our traders love gaps. You know, we get a lot of questions about scanning for gaps. So what a gap is simply when something happens generally overnight. You know, the market opens and then it closes the next day, and maybe there's some sort of news release, so that when the trading opens the next day, people aren't willing to pay the same prices they paid yesterday, right? I think this was actually when Apple warned that they weren't going to sell as many iPhones as they thought they did. So everybody has the night to digest the information, and when it comes time to buy tomorrow, they're not willing to pay the same price that they paid yesterday, which was actually this price here. Now they're only willing to pay this price here. So it moves lower. Whereas if we go back to this initial chart, right, you don't see that, right? You don't see it's in this area. You just, because all it's doing is saying, here's the closing price of one day and here's the closing price of the other day, and let's connect those. So you get much more information kind of looking at these candlestick patterns. And one more example I wanted to point out was right here. So these two candles here essentially are at the same price, right? So if we go back to what we learned, so this is a red candle, so that means the open was up here, and then it sold off all day and the close was right there. And then the next day, because this was a green candle, it means the open was down here, and then the stock rallied all day and the close was right here. So if you looked at this on that line chart, it would show almost no movement because both the open and the close are the same price. But you know that at some point, some bad news or a market event or something caused the market participants to not want to buy at this price anymore. They wanted to buy way lower. But at some point in that day, a big buyer came in and was able to erase that entire gap, right? We basically ran up all day after that. So that's a piece of information that you have that, for example, if you are someone who wants to read the news and trade off the news, there's nothing wrong with that. But what you need to do is you need to say, this is the news that came out, and then this is what happened to the market after. So some bad news came out there, but there was someone out there who said, this is a buying opportunity, right? And as we know with the order flow and how we talked about that, it's really who is biggest and who is most aggressive moves the market, right? So the sellers in this case were not the most aggressive and they were not the biggest. It was the buyers. And then you can see from that, we had a nice little rally.
Can we zoom into that so we can see the candle closer?
We can. What we'll do is what we're going to do is I'm going to show you this. So here is Trade Ideas. This is the web version of Trade Ideas. Come on. Did I type that? Oh, don't do this to me now. Excuse my, come on. Just needed to kick it. Turn it off, turn it back on. See if this helps. I think we're doing some updates tonight, so that might be the issue as well. If so, we'll find another example here. Or let me just do this. Adapt and improvise. Good thing I have many versions of trade ideas loaded on my computer at once.
Shouldn't have asked. I was just, like, getting closer and closer. And
And that's good feedback too. I'll remember that you guys are looking at something much smaller than I'm looking at down the road. So this is my layout. This is what everyone comes to my channel and sees. And here is the Apple chart. So let's zoom in to right here. So here's where I was talking about before. So you can see that, yeah, so this candle is red. So that means that the open of this candle was right here. You know, we probably pushed up a little bit on the day. We sold down and then rallied up, and then the candle closed right here. The next day, we opened up down here. So something happened overnight here, some sort of analyst rating or news event or something, right? Someone came out and said Apple phones are bad or whatever it may be. Doesn't really matter to us. The fact is that whatever news that was caused somebody to start buying. So there was, and someone saw that as an opportunity. They weren't afraid of whatever happened. They decided to start buying and to start buying aggressively. And by doing that, closed it at the end of the day. So this is why I wanted to explain candlesticks and talk about this analysis, is because you can see that you gained more information by looking at this kind of chart than the other guy did looking at the line chart, because a line chart would have looked just like this, right? Nothing would have happened. It would have closed here and it would have opened here. So you would have seen just a small little bump like that, and it would have ignored all of this data here. The other thing that's important to note, and the reason I talk about this, is A, you guys are going to spend most of your time looking at these charts. The other thing is that all of these scans here within Trade Ideas are using some time frame of this type of chart. So they're showing you the high, low, open, and close of some time frame. There's traders that we have that trade very, very short time frames. So for example, a warrior trading, he is in and out of a stock in sometimes seconds, and very rarely trades much past noon. So he's looking at very, very short-term charts. Someone like myself, I do a lot of swing trading, where I'll buy something and I'll hold it for a few days and I'll sell it, as well as I do a fair amount of day trading, where I'm intraday as well. But for me, I trade off of 15-minute candles, right? So each of these candles is a 15-minute time frame, because I do a lot of different things, and if I zoom in too quickly, I overtrade, which things we'll talk about later. But this is the time frame that works for me, where essentially your job as a trader is try to anticipate what's going to happen when a stock reaches certain prices, and then hold that move for a certain period of time. So depending on that time frame that you're planning on holding it at is going to depend on whether or not you're looking at a long time frame or a short one. You know, if you're someone who just wants to buy a stock and sell it 2 or 3 minutes later, you're not going to look at what happened to that stock 6 months ago, right? It doesn't matter as much to you as what's happening right now. Whereas somebody who wants to buy and hold that stock for 6 months, they're going to look that far back. So essentially, with this candlestick analysis and with the scans that are going to run based off this candlestick analysis, you're going to learn to try to predict the next few candles. And that's what we try to do, basically. With a 51% accuracy while managing our risk, we try to predict what the next 2 or 3 candles on whatever time frame it is you're looking at.
And so this type of chart right here is called a candle chart, right?
Candlestick, yep.
Candlestick chart.
Yep.
Versus the other one, which was a line chart.
A line chart, yeah. And what you'll find is on most basic websites, Yahoo Finance, Google Finance, they'll just show you a line chart. And then most more professional services like Trade Ideas and eSignal or other big charting platforms, we stick exclusively to candlestick charts, more or less because traders are they want the most information possible, and candlesticks give you more information.
Do people actually trade off those line charts then?
Some do. Yep, some do. JC Peretz from All Star Charts, like you guys met him as well, really nice guy. He does a lot of really long-term analysis. So his really long-term analysis wouldn't matter about stuff like this. You know, this type of pattern that I've showed you is important for somebody who would want to buy Apple and hold it for 2 or 3 days and then sell it, right? But if you're looking long term, you know, a year or so out, these little fluctuations aren't as important to you. So if you follow JC on Twitter, which you should, you'll see he posts a lot of line charts as well. So what's going to happen here, and a lot of traders hate when I teach them, because this always comes to it, is it's really all about you guys. You know, I'm going to show you the history of it. I'm going to show you the principles behind it. I'm going to show you you know, the ways that I do certain things, but that might not gel well with you. And at the end of the day, because trading is such an emotional game, and we're going to talk a lot about the emotional side of trading, it is very important that whatever you decide to trade makes perfect sense to you. So you have the conviction to hold on when you're right, and the ability to cut it quick when you're wrong. Does that make sense? I think I have the final screen I'm going to put up here for a second, but I think it's just Q&A time. Yes, it is. Let's go into here. So, any questions before we wrap up about anything? And I'm going to see if I can get a hold of the chat in the meantime. No questions I can see there. So any questions from you guys before we call it a day? No? Okay.
I'm curious what our homework is.
Oh, so your homework, and this is what I brought this up here. Forgot about that. So I'll share this with you. I figured out what's happening is I'm on the beta build. That's what I'm not using the actual version, so I'll give you guys the actual version. Is to take a look at this layout that I'm going to send you. And again, Trade Ideas is one thing that we do great. I'll be able to just send you this entire layout. It will look exactly on your screen the way it does on mine. Is to go through each of Holly's trades each and every night, and from there, let's see if we can get any of this time frame. 15 minutes. Okay, so we're going to do this on daily charts, but each and every night, or the end of the day, I guess it's not night for you, the market closed at like noon where you guys are, is to just go through each of these charts, and for absolutely no reason other than I just want you to get a kind of understanding of what happened each day to each of these symbols. So just a quick walkthrough of the layout is all of these are different AI segments. And again, anybody who's new to Trade Ideas, we have a machine learning AI that is just really beating the market month over month, year over year. You can see every recommendation that the AI is given pasted here right on your chart where it says buy or where it says sell. But that's not important. I just want you guys to go through and click on these every day, and this will populate this chart, which is a daily chart, just like we talked about, and just look at the last candle and a couple candles on the chart and try to paint a picture of what happened in your head. You know, for example, on this, we gapped down, so there was some sort of news or event that caused this to move down a bit. The sellers came in early, and then the buyers retraced that. And that's it. Just in your head, what happened each day across each of these stocks. And the reason I'm giving you the AI is for no reason other than every day you're going to be presented with a completely different basket of stocks that look different. If you would like, and this is something that I was thinking of doing as well, is pick a couple of these that you have questions about and take screenshots, and then you can send them to me before the next one and we'll go over them. But basically, this is just kind of to reinforce what we went over of what each candlestick means and, you know, what it's showing you about what happened that day.
Is
And
each
you're gonna
candle?
send us the layout or the chart to look at, or
Yeah,
just look at any chart?
no, I'm going to send you this layout, and you can go through this every day.
Right.
Is each candlestick a day then?
Yes, so each one of these represents one trading day, so from open to close.
Okay.
So Holly is generally recommends for intraday, but we've actually done a fair amount of study with Holly in the long term, and it is very accurate when it comes to what we call skew. So Holly trades generally tend to drift in the direction that she called over the next about month, right? So there is some value to looking at this every night. Sean has what he calls his Holly hot list, where he goes through this every day and he pulls out a couple stocks that he thinks that are going to be good for a long period of time. Chicago Sean on Twitter, if you're not following him. And essentially, that's it. That's what I want you to do. It's just, I don't want you to make any decisions or any conclusions or anything like that. Just get a general idea of what happened that day.
Mm-hmm.
Make sense? That's your homework if you choose to accept it. Okay, guys. So next week I am going to try to make it. I'm actually going to Chicago with David Afariat to talk to the CMT convention there, which is actually fitting because the CMTs are market technicians. It's a group of registered market technicians, so people who've taken a very intensive course to learn everything about this. I'm taking it now as we speak, which is funny, but it's great because I'm hoping that I'm going to talk to them, and I'm going to go and talk to them about what they would like to have learned more about with charting when they started, because all these guys, they're going to be well versed in this. They've studied it a whole bunch to get that designation. It's very hard to achieve. So I'm going to get some feedback from them about what they would want to see if they were starting this, and then again from you guys for any questions you have. So this is the first, not that the rest of them weren't important, but this is the type of thing that you guys are going to look at every day when you start trading. So this is the fundamental stuff for you guys to get started. Okay, so we shot over time a little bit there. So I am going to call it a day. Again, thanks everybody for popping out. And again, if you're just showing up now and you want to see all the other ones, they are back on the channel. We're going to start sharing playlists as well. So you can email into info@tradeideas.com and we can send you over the playlist of all of these videos from start to finish. So thank you very much, guys.